Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab community? Well, thank you, Marty. And how we doing in YouTube this morning? Welcome to the TraderLab. It is March 2nd, 2026. This is following the weekend event with the attacks on Iran. So this was the first opportunity to trade other than the ETH after the war started on Saturday. So it is now Monday. Let's think about what's going on here. Now, those of you who follow the stream know that this stream's built on the idea that the market has specific behaviors that at times we can get in alignment with it. It is really based on using a high tier order flow tool like Bookmap and integrating it using tools like the volume profile, auction market theory, using structured trades that each individual trader needs to vet to determine if they have a probability that favors them or statistical edge. And this is really a business of gaming. All of this emotional stuff that we get into, being fearful, of course, which is part of human nature, predicting, wrong business. This is the business really of statistical probabilities, understanding how the market works, why it does what it does, how at times you get in alignment with it, and all the other things you bring with you to the table. And I'm using the analogy quite intentionally. The table is not related to the business. This business is one of a random distribution of outcomes, no control over the outcome. The only thing you have the opportunity to control in this business is yourself. And if you're not controlling yourself, then another component is controlling you. And that is either you're a gambler or the emotional stimulus, fight and flight, FOMO, you've all heard of that, and fear of loss is really what's dominating you, and that is part of primal wiring. That is not a recipe, in my opinion, for sustainability in the business. If you want to learn the business of trading, you're also going to have to learn about yourself, market mechanics, why the market does what it does, how at times to get in alignment with it, and like the rest of us, you're going to pay cost of production and overhead. And in our business, those are stops and losses. So let's go from here. We got a lot to talk about, a lot of trades set up today in TraderLab. And the point of the TraderLab is not that you become this is not a business of adrenaline and dopamine, which of course we have to deal with. It's really a business of just showing up and doing the job. And that might seem a little detached, but guess what? The business is one of detachment. Can you be detached from individual outcomes? Can you? Well, most can't. So maybe you should find out why most retail traders fail and maybe what you can do about it if that's you. And by the way, it's all of us. So let's not worry about what we have done. Let's maybe be concerned about what we are doing that is under our control. The things we control, we are obligated to do what's in our best interest. The things we don't control, we cannot prevent. We cannot prevent stops. We cannot prevent fear. We cannot prevent greed. We can't prevent them. But what we can, in other words, you're going to feel them. What can you prevent? How about this? Anticipating them and then recognizing that since they are part of the output of your limbic system, your fight and flight and the rest of it, if you can anticipate those emotional stimulus, maybe you can build something in to control them and put the statistics on your side versus gambling. That's the idea of TraderLab. Maybe you'll find that interesting in your journey. And there's no cost for TraderLab. It's available to all of you. You can always use the link in the bottom of YouTube if you're inclined, and certainly like to meet you in the TraderLab. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room, but if we get there, we'll talk. So I always like to start with the higher time frame. The reason is think of the market like a top-down, bottom-up approach. And I always say top-down. I don't say bottom-up, go the other way. I'm saying is you have to always look at the big picture and then see how we fit inside. This is very much like Matryoshka dolls, a vertical integration of time frames. So if time frames are vertically integrated from a higher time frame on down to, microstructure, isn't it all the same in different time frames? Well, if we can understand that the behavior is the same, maybe then we can anticipate the behavior. And when we recognize specific conditions that we have vetted, so in other words, we're waiting for them, not predicting them, if they happen, then what are we supposed to do? Well, that's what the point of the plan is. You don't make it up here. You don't ask the question, what should I do? The question is always going to be, what will the market do? And you have no control over that. You only have control over what you do. So do you want control? It's all in your hands, up to the point you push the button. It's no different than the way the casinos work. So let's go take a look at the higher time frame. You're going to find something, as usual, hopefully interesting. Now, as you know, and this all sets up today, what did we do? How does the market work? Market goes down. We get continuation selling. Watch very closely. And then what might we do? Trap the breakout traders, retail behavior. Oh, it's going to zero, Lewis. Right. Well, maybe, But what do we know? The market is short here and these guys sell. All right. What happens to them? Well, if we don't, go down, what's going to happen? Great question for this astute group of traders. Well, maybe if we run out of sellers, then who become the buyers? These shorts and these guys, and we come across the range. Now, where else do we know there's buyers? Above this high and this high, buy stops. What do? It's a fillet of trader, expansion higher, squeeze. Now what do we know? Market's long. Market's long. Going to the moon, Alice. Well, maybe. Except what happens here? Now the longs are in here. What do we do to them? Same. Down. And what happens on Friday? Open lower. Now Friday was very interesting, and we discussed this in the TraderLab, just so you know. What we anticipate on Friday often is flattening out, evening up. So what that set up on Friday was trap the continuation sellers. See something here? Trap the continuation sellers and then come back across the range. So I have shorts in here. They get squeezed. And then I have shorts in here. So what am I anticipating? The same as this. Come across. Now the thing about Friday that was very interesting, and I posted this in the lab, and it's just, these are all curiosities. There's no prediction in this, so let's get over it, okay? This is not a business of being right. It's a business of doing right, not being right. Big difference. What is doing right? That's your plan. If it has an edge, and if you're in TraderLab, you should only take trades that have an edge that favors you. Not predicting, not being right. The only right or wrong is not the outcome of the trade. It's did you follow your plan? And your plan is not just make it up as you go. That's not a plan. That's just gambling. So if you think that's a plan, get in here and just push the button. I'm sorry, not a plan. That you might as well just go to casino, throw some dollars on the table, get the cocktails and the ticket to the buffet. That's entertainment. That's great. And that's okay too if you're just here for entertainment. But that's not sustainable. I mean, would you take your retirement account, sit down at a slot machine and think now you're going to fund your retirement because you're gambling? Well, why would you think anything is different here? So what we know is on Friday, we were looking for flattening and evening out, and we got some of that. So the shorts were getting squeezed in here, and then we have these guys. Yeah, but there's a problem here. We couldn't go anywhere. We couldn't get above this high volume around 90, which is a key level, which I will be showing you. So if 90 is a key level and it becomes resistance, then I can just rotate. The buying was exceptionally weak on Friday. And this, I posted this. And the thing about it is, it's not predictive. It's just that's interesting. Why do we not get more short covering? Okay. Well, all right. Then we have our war. That's lovely. Now let's take a look. Now before I go on, let's come back, and I've been pointing this out for weeks in the stream, or maybe months at this point. This is a key location of support. This is an intermediate time frame. And this, if you want to think about how this auction works, is what's too low and it rotates, what's too high, abusing everybody equally. This is the high price or high volume or a fair price. The nature of the market in all time frames is to rotate. It goes over itself. So it goes up, to go down. It goes down to go up. It goes up to go down, and so forth and so on in all time frames. What I know here, this is the big kahuna. If I get under here, then it's, and I mentioned this quite a bit last week. In fact, it was over here. This is key. What did we do? We didn't take this out. Buyers are here. So what do I know? I got buyers. And if I look at this yellow line is called the naked volume point of control. So in an intermediate time frame, high volume is here. On sale. Lovely. On the developing daily time frame, going down in time frame, this is the highest volume. All I'm doing is going down in time frame. And if the retail price, think shopping, is too low, I can leave it. And then, abuse. What happens if I come down here? Sorry, Charlie, still on sale. Buyers are here. Too low. And that, of course, sets up this squeeze, and that sets this up. Now, let's look at a couple other elements. If this is support, where's my next level down here? Well, I've got 6802, an outside edge and a higher time frame. So I know this is an area because of these buyers. And then I know 71.75 down here is too low. Maybe. This is how this might work. Let's just get a little higher time frame. We'll go over here. Okay. I'm not paying that. Yeah, but it's on sale. Rotation. Okay. You see how this kind of goes? And the volume dries up. Let's say if the market goes up. Now, there's no precision. This is sort of a, what's happening up here? Even though the price is going up, this price is not equal to what's over here. There's less. So that means even though price is going up, we have less buyers. Okay? Then we have a fair price here, and then we have a low price here. So that gives us this. If I break out of here, it gives me 802. But what else do I know? This is key support. And I know if I come under here, we could do the Acapulco cliff dive. So 71-ish, and there's no precision. And why is this important? There's stops under here. Okay? And then if we get under there, it's hasta la vista. We'll see you later. Thanks for playing. So be conscious of 71.75. And again, these are not recommendations. This is auction. Now, I'm going to take you now to Bookmap, and I want to show you the ETH. Let's move together. Is everybody with me? Here's the ETH. Notice this structure. This is that key level, 72.25. Whatever it is, 70. Here, let's look at this thing. Where'd it go? 71.75. 71.75. This was the breakout of that level. This is the end of the planet. An alert target has been reached. And this is the ETH low. I come down, I test. Now right here, no clue. Now I was asleep, so no trade for me. But when I come in, I look and I go, isn't that interesting? And here's something else. And here's the most important piece, sequentially speaking. So in a higher time frame, out here is too low. Who knew? Then let's look at the language of the market. This is only the ETH. We're not even in the RTH yet. This is outside edge. Who knows? And as we come back up, you see these little high volume nodes. These are little auctions. If that's too low, I move. Too low, I'm out of here. and then we're starting to move up. So, and then I come above here. I mark that on my chart, and it's called a low volume node from the ETH. What else do I know? Watch. Let's come back. $68.02.25. Where is it? This one. I think this is an old one. Hold on. 68.02. Yeah, this is out of here. 68.02.25. RTH open, overnight volume point of control, the fair price from the ETH. So what do I know? Not what will happen. Here's what I know. I know this might be too low. I know that this is an outside edge of the current distribution. I know I'm right here is a key level. If this is too high volume, in other words, the price is too low, think going to the supermarket, that's a fair price in this area. And if it's too low, I'm going to come back across the range. This is that outside edge at 68.02. If I go to 68.02, it's resistance. Well, what happens if I get above 68.02 in the ETH and the low volume node that is over here? What happens if this all becomes too low and now the retail price in the last auction is there? Overnight volume point of control. So what do I know? Well, maybe too low, maybe too low, maybe too low, last auction ETH, retail price, and what else? We're in a gap. We're opening out of value, out of range. What can it do? Well, we could do the Acapulco cliff dive, but didn't we already do it? Maybe. I always say maybe because I have no clue. But when I open, now I'm looking at sellers initially. Why? That's what retail traders do. Nothing wrong with that. They win. Gamblers win. It's random. So it's not who's going to be right. When you're thinking right, wrong, you're thinking win, loss, you're thinking P&L, getting approval. This is not the business, okay? Not the business. So let's go take a look. So everything suggests so far the potential for longs. And this is all before the market opens. And again, I'm coming back to the ETH. Now, let's get into the first trades. Now, one of the things you'll learn in TraderLab, and write this down, it is really important. It's called think like a retail trader. Don't act like one. Your impulses, think where your impulses come from. Emotional stimulus has nothing to do with the business. Your impulses. Oh, it's going to go down. Why? You're listening to news all weekend? What are you listening to? What is in your head? Is it the business plan that you have for trading, or is it the news and how terrible everything is and how this is going to escalate and all the emotional triggers? Maybe not. Who knows? Do you? I don't. So what do? I don't know. I just follow my plan. Seems to work okay for me. Oh, what about the next trade? I don't know. Do you? So we're opening out of range in a gap. That means the market's out of balance. So what do we know already before the RTH open? The question, and this is in the context grid sheet that I've shared in TraderLab, and this is available to all of you, is the market responsive? Now, there's two things here. Something that's called initiative and responsive. Let's go on a little idea. When you go to the supermarket and your tuna, I love the tuna example, don't ask me why, but let's say the tuna's, I don't know, $1 a can. We only hope so, right? But you go to the supermarket, it's on sale, and you really don't need the tuna. You eat tuna, but it's not. But you see it's at 50 cents a can, a flash sale. You don't need the tuna, but you take 10 and you throw them in the cart. What are you doing? You're responding to the price below what you perceive to be a fair price. In other words, it's not $1, it's 50 cents, okay? That's called responsive. And now you're a buyer. So responsive buying. So what we know before the market opens is we found our buyers. Now we don't know, of course, what's going to happen here. But the ETH is the last auction, and I have an outside edge. I found too low, who knows, and outside edge. So when the market opens, my anticipation is selling. Why not? Am I going to sell? Maybe. But what do I know based on the higher time frame and all my experience? What does the market tend to do? It tends to trap. So if I know the market may trap the early sellers because I already have inputs that suggests to me, and nobody knows, by the way, so let's not think about that. Maybe if I take a short, I'm joining the side that is at high risk, in my opinion, because the market's already short from the ETH. So if the market is short and I have still shorts and I'm in a gap, I'm already working on longs or quick shorts. 1 second, please. I got to adjust something here. Okay. Everybody with me so far? How we doing in YouTube? How you guys doing? Let me get the chat back. It tends to disappear. Hold on. How we doing? Are you guys good? Please give a like if you're visiting in YouTube, by the way. This is the TraderLab, and this is the business of trading. You have to get over it. This is not a video game. If you want to be in the business, you have to do what other traders aren't doing, and that is don't do what they do. Don't do what you've done in your development that doesn't work. What you should be doing, in my opinion, is take what doesn't work and figure out why not. Because the thing about it is we all have random winners, and I always say this is the trap, because random winners mean nothing. We all have random winners. So when we have random winners, we think that there's something there. Let's keep doing that. Look at that. It won 3 times in a row. Every time this shows up, I'm going to take it. What happens if it, over time, it loses, even though it has these random winners? Where are you headed with that? Out of business. So do you know which trades favor you versus just randomness that doesn't have an edge? If you can't answer the question, you're just playing a video game. That is not sustainable. That's just the way it is, So, RTH open. Let's watch. So what we're looking for is, this is the overnight volume point of control. So we're opening out of range in a gap and the market's out of balance. What we have to try to figure out is the market responsive? But because of news, typical retail trader behavior is to sell, and then we want to see what happens to them, of course. So let's see what happens. RTH open. Who knows? But what do I know? There is, and you have to vet everything for yourself, opening lower out of range, an 80% probability I get to the overnight volume point of control. That's there, 80%. What else do I know? There is a 91% probability of getting to the ETH high or low. Now, let's put our thinking caps on, right? What do I know? ETH high or low. But what do I know about the ETH low? It tested a key level, and I'm opening above it. This right there sets up the warning Will Robinson moment, because now I have this probability over 90% to get here. So does that right there tell you that shorts, which may or may not have an edge to them, or might be on the weak side? Right there. That's the first thing that I can derive by just looking at my chart before the RTH open. What has it done? What is it trying to do? Who's on the hook? Always ask yourself, where's the fuel? So I know that there's a 91% probability to take ETH high or low, 80% for overnight volume point of control, 98% probability to take out first hour's high or low. Well, there's the first hour's low, and I'm above that low volume node, right? You see how the pieces are coming together? So what this tells me here is, Shorts might not be such a good thing, or if I take a short, I'm joining the weak side who's potentially going to get squeezed. That's what I know. I don't know anything else. So let's look. Now I'm going to show you some trades. These are structured trades. Now, you need to understand there you can trade from either side. It doesn't matter. What I always suggest to TraderLab participants is that you identify and align with the dominant side. Now, that doesn't mean you're going to know, can't know. You can suspect, and we don't know where the trade will come. We know, but if you're in the TraderLab, you'll know where it might go. You don't know where it will go. So all this, what it will do is always random. But if you understand how the market works and how the auction, which is really what the market is, if you can learn these things, then you can anticipate behavior. You certainly can't predict it. So I can anticipate behavior, and then I have to wait for the trades to show up that have an edge. This is where you stop being a gambler and you start becoming a business person. Gaming is built on statistical probabilities. That's the business we're in here. It's not on a being right thing or what you could have done with hindsight. That's amateur hour. Professional traders don't experience this environment the way most retail traders do. Retail traders are really very much P&L oriented. Professionals are way past that. We don't think about the P&L. We just think about the process. The P&L is the outcome. So once you have an edge, it's no longer about the outcome of the next trade or the next iteration. It's just the outcome of following the plan. And does that edge reveal itself on this last trade? So it's not the individual outcome. It's all of it. So here's what I know. This is called developing volume point of control. Let's start the process. Now I do this the same way every time. And you're going to go, well, the market is unique. Aren't you going to do something different, Tom? I mean, we got the war, this thing, big trouble, market going to zero. Of course. Well, I'm not smart enough to know what's going to happen. I'm smart enough to know that predicting behavior in the past for me was very expensive, because then I become myopic, fixated, and I'm not trading anymore. I'm in a FOMO mode, and I've already, despite what's happening right in front of me, I've made a decision that has nothing to do based on participant behavior, which is what I'm trading. I'm trading an opinion which is based on nothing. And it is nothing. What is your opinion worth? Nothing. So let's look. So we get market opens here, VPOC migration. This suggests potentially this is too low. But what do I know? I know where my outside edge is, right? So it's down here. And this O2. So I know I have an outside edge down here. So if I take a short, I'm looking for this test out here. That's what I have available here. And for me, I saw a short. I don't take it. What am I going to take a short for? Do I want to join these guys? No. Watch. So here, variable high volume node, variable high volume node. In the microstructure, this is too low. Here's how this works. Oh, it's on sale. New retail price. It's really on sale. Going to the moon, Alice. Resistance, right? Resting liquidity. No clue. Not my job. Here, little data hiccup. Rhythmic. Sweep. Sweep suggests counter rotation. Supports down here. Nothing for me to do. Looking at this, and I'm thinking, well, maybe a long, but I've got two-sided trade. I got nothing to do. My resistance is here, this high volume structure. This is like a volume point of control. Too high, liquidity. High volume, break low. If I break away from it, maybe it's too high. Break below here, maybe this is too high. Rotate back. So what am I thinking? My thought process is, and this has an 80% probability, that maybe this is too high. And now we can go down somewhere. You know, the somewhere is part of the thrill. So we come down here, no way to know. And this is my outside edge, okay? So this is where I was thinking we might go. And again, it's not predictive. So I'm thinking based on the auction, which is all I have. And I have this liquidity in here. So this is my area. Now for me, I don't have a short, not my thing. I'm thinking that we have the shorts in the market, and these sellers can't, just based on I show, don't forget at the top of the stream, and if you missed that, go back to the top of the stream, that we're going to squeeze. And again, I don't know, but these are my outside edges. So as long as if I come down here, I'm all over it for a long. All right. So this here is a microstructure, and I have no clue. By the way, here, no idea. So I have nothing to do here. I'm just sitting here with my jaw on the ground like everybody else. Is it going to zero? What's it going to do? Well, this is resistance. Let's come back to a concept. Multiple time frames, higher time frame, lower time frame. What do I know? I know this is a support area. If that's support from the last auction in a higher time frame, and in the most recent ETH auction, which ends at RTH open, this is the high volume. That is the same as that, except that's a high, very high, that's the highest time frame, high volume. And if a price is too low in any auction, it's going to be 50-cent tuna. Sorry, there's 4 cans on the shelf, but you're out of luck. And we come back. Now the most recent high volume, this is previous, is the current auction, which is the ETH. So if I come outside, wherever outside is, and remember outside for me is in here, I can come back to there. If I can get across there, then these guys might get trapped and we'll go into what's called the squeezeteria, and then we can go north. So let's see what happens here. So for me, no short, and I'm looking for longs. And right here, I have no idea. You know, I'm looking at this going, I don't know. Now, let's watch. So we know this is too low. In hindsight, no clue. I know right here is the opening swing high. And at the opening swing high, I have a structured trade. In fact, there's an alignment thing right here that I want to show you that you're going to find perhaps interesting. What did we do over here? Didn't we find too high, which set this whole thing up? And of course too low, but no clue. Let's come back to what we know. The sellers are here. The opening swing high is there. Okay, everybody with me? What happens if I break above the opening swing high? Is it possible that we can buy it? Because now I've got shorts in here, and they become the buyers as they get squeezed. And then the shorts that are short from Thursday and Friday last week, do you think maybe they might cover once they see us come across and start into the gap? And we have, what's the probability? I know you forgot to ask, to take out the previous high or low. 68% probability to get to the previous low and fill the gap. 80% probability here. 67%-ish probability to go there. What do you think? Past performance not indicative of future results. Can you see how you can put a plan together? And then, of course, your job is to wait for the trades, which may or may not show up naturally. So this is along in the TraderLab. And where you're going to try to go with this, subject to your plan, is where? Where's that overnight high, Tom? Where was that? And yesterday's low. So fill the gap in here. Okay, so let's look. Now I'm going to show you other trades while we're at it. Let's watch. So, VPOC migration. Once you're over here, what might we say at that point? Maybe we found too low. Maybe these guys are under the bus. Thanks for playing. Maybe this is a long. Maybe now that is too low. And what can I do? This is a TraderLab structured trade. It's called VPOC migration. I made these up. What can I tell you? They work for me. You have to vet them for you. This is a long continuation trade. If it's in your plan, this is definitely a long. This one is, all about vetting. And where am I trying to go? Here. And then higher. So notice the liquidity coming in. So this is another target. What's going to be above yesterday's low? How about stops? What do you think? Now, there's more. We have some other advanced trades here I can show you. Let me show you this. Now I'm going to start integrating order flow into this so you can kind of see some ideas. And again, there's not a right or wrong. There's only a understanding of what you're seeing and a trade that you vetted that's in alignment. If you take this trade over here, it could very easily just come outside and you take a stop. Now here's a question for this astute group of traders. Is that any reason not to take the trade? Because you might take a stop. You know why I'm bringing it up? Because you can always take a stop. So if you freeze with fear because you might take a stop, then you are now no longer a trader. You're just sitting in the bleachers. And the idea of this is traders take risk to get paid. If you aren't willing to take the risk, you've just basically closed the door to your business and walked out of it because you're no longer a trader. You're now someone who's fearful. And that's human nature, and that's fine, except it doesn't work here. This is too high. There's my sellers. You can see the icebergs. This is retail. If I get a trigger, which is right there, I can buy this. I got scale there, and this can become support. This is an order flow trigger. If I'm going for this, I already know I've got resistance here, and this just came in. So this is front running. So I have this laying in here. I can see that. So I would target that. If I break high, this can become support. I can buy this. I got to deal with this. And then I've got this. And I know there's stops in here. And I have, what was the probability for the ETH higher low? 91%. And you have to vet this for yourself. Past performance, not indicative of future results. Let's watch. So where am I trying to go? I'm trying to go there, right? So we have a sweep here, and a sweep suggests the potential for counter rotation. I have a target here in resting liquidity. Subject to your plan, long to there, long to there. Same trade, you see it? So long to there, to there. That's a structured trade. Long to there. Sweep, this suggests counter rotation, but you have stops inside of this range. For me, this is where I am going, and then these are all statistical targets, wherever. Yesterday's low, very nice. High probability, 67%. Now, what do we do with this thing? Well, if I got long here, I'm scaling here, and then my helmet is on. This becomes support. This is support. Now I'm going to do a little labelage here for you so we can just see what happens. And all I'm doing is I am tracking the behavior of the participants in different time frames. I'm aware now that I'm back to a high volume area and I just filled the gap. So the possibility is if I fill a gap that I'm going to get profit taking and squeezing and this. So value area low, getting to previous value area high. Let's go. Lost it. There it is. It's like 18%. Now you're going to say to me, Tom, the statistics are not good for this. Getting to yesterday's low is 68%. Okay, but what makes you think you're going to get up here, Tom? Because the market's short and there's a squeeze going on. That's called context. You cannot just be mechanical here. You have to think. And you need to write this down. Think like a retail trader. Don't act like one. One moment. Resistance. Now this is support. This says warning Will Robinson because if I don't break up from here, I can counter rotate. It's right here. It's a sweep. No clue. So support is here, outside edge, and of course down here and wherever it goes, it goes. So this is always about trade management, isn't it? Now this is interesting. Let me show you this. Now, not all of these are trades that anybody, obviously you shouldn't do any trade unless you understand it and you understand the possibilities. Here's what I know. Let's talk about what I know. Not what will happen. That, no clue. So it's not my job. I don't go with the it's going to do this or that because I don't know. So I'm in the it might do this, it might do that. If I find too high, wherever that is, here, and I break high, now above yesterday's low, I have the ETH high, and I pull back. Here's where support is. Here, and here, and there. Okay, so I have now, watch. This is called VPOC migration. I got to label this one, by the way. I made it up, as I mentioned to you guys, and this is part of what I figured out many, many, many years ago with a lot of, research and dead ends like we all have. And I noticed that, and this is before there was order flow or any of this, when I was doing market profile, I observed how the proxy for volume, which was called the point of control, it was not, we had no volume, so it was time based. It was 30-minute bars or brackets, this is what they called it. So I started doing this way back, and I learned market profile in the, I don't think it was, maybe 1986 or something, somewhere in there, maybe 85, from the guy who created it, Peter Stottlemyre. And I tried to mix it with other stuff I was doing, indicators. And that just added more problems. It was not a solution. It was just actually the problem, the whole problem for me was random inputs in a random environment. So this here is support. So here's what I got. Support, break low. Now right here, when it breaks low, no clue. All right, as far as I know, it's going to zero. Right here is my retail price. So when I'm out here, I'm thinking what's something called mean reversion. Mean reversion is outside in trading. It is the key trade that I've shared in the TraderLab because, and here, this is just to throw your brain in a little bit of a loop. Let's look. Come back. Come with me. Let's come back to concept. That's the mean in a higher time frame, this high volume node. And if it's too low, think of shopping. It's on sale and there's two on the shelf. You can't buy it here. I'm leaving. Now when I go down in time frame, the same thing is happening in all time frames as you think about it. So what I know is this is too low. What about this? Too low. What about this? Either it does this or this. And you're going that. I always think that this is so, like up or down. Great. But what happens? It's not what it does. It's why. So if I know I've got yesterday's low and I know I've got orders sitting here. I'm going to target this. And then I'm going to look for continuation longs somewhere. Wherever it goes, it goes. Who knows? And I know where the stops are, don't you? Aren't they over Friday's high? Why would I not be going for where the retail traders keep their stops? Think like a retail trader. Don't act like one. Think about what you'd be doing if you were short. Would you be covering? And if you were a position trader, where would your stops be? Wouldn't they be over yesterday's high? Friday's high? Maybe. Maybe not. I don't know. What do you think? So support, break low, shift high. It's this or that. I break low. So what's the language? Now I know. Too high. There's my liquidity. And now this is retail. This now is too high. So what I can do is, if that's too high and I know this was too low, I can, let me show you, shift into a mode, which I'm already in multiple time frames, called mean reversion. Underline the term mean. And the way mean reversion works is, if we find a price somewhere that is fair and we come outside, what does that do for us? It sets up something called mean reversion. And we joke about mean because identifying the outside is really the challenge with this thing. So let's look. This is support. Break under it. This is the new retail price. Remember, up, down, break, down. All right. My next trade, I already know where it is. Somewhere. Here's where it is. Out here or there. Is that too many choices? So if I know that, I already know about this. My buyers are there. My sellers were here. The buyers absorbed these guys. So there's an appetite here. These sellers are here. What happened to these guys? The buyers absorbed them. What about this? We'll see you later. Okay. So where's my buyers? They're here. All right. Now, where's my stops? You got to think again like a retail trader. Don't act like one. How many stops do you think might be piled up right there or anywhere? If the market is, remember how the market works. Market goes up to go down, goes down to go up in all time frames. So if the market's up, what do I got? Longs. What about the weak ones? Hasta la vista. We'll see you later. Thanks for playing. Supports here. VPOC migration. What are the possibilities? VPOC migration, up, down. VPOC migration, what are the possibilities? Down, up. If the market's going up and I got stops, I don't know about you, buy it. Where to? There for a scale, and then hold. That's all I can tell you about it, really. To where? To there. Next target. Why is that a target, Tom? Well, let's see. There is what? A 91% probability to take out ETH higher low. I took a walk on the wild side. What do you think? Are you guys tracking? How we doing? How do you get the probabilities? Well, use the link in the bottom of YouTube and go to TraderLab. There's a library of webinars. There's a document section, and of course data mining and the rest of it that everybody in TraderLab shares. The thing to understand about TraderLab that makes it unique, it's the leverage of the community. A lot of these chat rooms and quote traders who know so much, they somehow hold their cards close to the vest, like, gee, I'm not going to share. It's the most ridiculous thing I've ever seen. I know in myself, I was so thirsty for knowledge when I was starting out, and there's these traders that would, I can't tell you. Well, and you ask them a question, well, why this, why that? Well, I can't tell you. And now from my experiences, because they really don't know the answers. But back then it was like that for their ego, that somebody wanted something from them. It is a trap. So you have to find the answers for yourself. Even what I do. All I'm doing is something that I can share. I've taken this process and try to make it simple. It doesn't mean you'll ever be profitable. It gives you a fundamental understanding of how the market and the business works. When I say fundamental, doesn't mean, it is actually advanced, but complexity obscures what's right in front of you. So I went in my development from classical bar charting to indicators to system design. And then I had to go back the other direction, reverse engineer and remove a system, remove all the indicators, take it all, throw it away, because I didn't understand that all I had was random inputs in a random environment. So I always had winners. That wasn't the problem. The problem was not enough winners and trying to fix it. So I spent years, with random winners trying to solve, So I never could solve it. It would seem like I would solve it, and then yet it wouldn't be solved. So because I was trying to solve for something, I was doing the wrong process because I wasn't solving for the environment. I was solving for squeezing risk out and getting more certainty, which might seem logical, but it's really not. So what do we know here? New retail price. What can it do? Same here. Too low. If that's too low, break high. Now what? Watch. These are structured trades. You can learn this. I'm not saying you should trade these. I'm saying you can learn them. Now what you do, that's your business. You don't have to be trading these things. They might not be your trade. The point of the TraderLab is that you build out your trades. You can use the methodology I've shared, make it your own. So this is along to there. If this is too low, it's support. What else am I leaning on? This is a stop pick. Stops are under there. And why did the market go up from here? There's buyers here. What happens if I come under there? Well, retail stops are there. There they are, coming out. And what else is here? Buyers. Buyers. Does it make sense? Maybe I'd be a buyer after the stops come out and to come here for a scale. And if I can hold this, let me mark it, a variable high volume node right on the price map. Let me put it back on here. That I could get long. Maybe. Or take a stop, or, whatever it is, it is. I don't know. Do you? Where am I trying to go? It was the ETH high, wasn't it? And then what do I have? The retail price from Friday. And what else do I have? Stops above yesterday's high. And there's the current high of the day. Who knew? This is the TraderLab. This is the plan. And this is whatever it does, it does. Now let's watch the trades. Where's support? Now, guys, if you follow the stream, you see me do this every day. Why? I do the same thing. The market is random. So you got to get over this about being right and predicting what it's going to do. Is it better to come into the day with a curiosity and then let the market tell you what it is doing, so then you can wait for trades? It's like waiting for a bus. Or are you chasing the market around playing a video game and the dopamine fix? So too low. And this, we know about this, right? So ETH high, then the stops. That's it. You don't need anything more. Now at 9:30 Central Time, we have another trade that shows up. Let me show it to you. Variable high volume node. I got to keep up with all this stuff. So what you see me doing is I'm just trading the auction. And what the purpose of the market, remember why we have a market. It's to figure out the participant perception of valuation. What do we collectively think is too high or too low? And then as we go down in time frame, we're going to see the same behavior. So As you're coming up into liquidity, you're aligning them with targets. This is a target and yesterday's high. Remember, the whole purpose of this trade is to take out the fuel. This thing, this. Now we can go higher or you could be done. It doesn't matter. Does it matter to you? Are you thinking shorts all of a sudden because now you don't have longs? So FOMO, would you consider that maybe the best trade so far might be done because this is where the buy stops were over Friday? Now we have shorts in here. We can keep going. The next potential target, not a recommendation, is 69.18. Why? Why? Because high volume here is too low. 68.0225 low volume. This is the low of the day currently. Too low. Why else? 68.40 too high. However, gap filled 67%. Come across the 68.40. What does that set up? It sets up the potential 68.70. But what do we know, Tom? Don't forget what we know. What do we know? The market is short. The market is short. And we have evening up, but never got back in here. So weak buying. Now we get the Acapulco cliff dive. We get the shorts, and we already know this is too low, and we get those shorts trapped. Same as this, okay? Shorts trapped. Same as this. Look, shorts trapped. Squeeze. Shorts trapped. Squeeze. What about this? Shorts, longs, balance because of Friday. Gap, shorts trapped. Does this look familiar? Kiloton, what makes anything a short? Are you picking a number out of the air? Are you making it up? The question about what a trade is already answered in your plan. If you don't know, you don't have a trade. Are you a counter-trend trader that has an edge? No, if not, you don't have a trade. Your job is not to thinking about your P&L. Your job is to already know where your next trade will show up. If you have to ask the question, you don't have a plan. And I'm going to stick to that, because that's the way retail traders behave. And the answer, remember what I always say, and I'm only saying this because I've worked with traders and trained traders over the years. If you have to ask the question, you don't have a trade. Very important. FOMO is already working in your brain. You're already thinking about fading. Where's that coming from? It apparently isn't in your plan. Otherwise, you'd say, well, I have a structured, vetted trade, and I have an edge with counter trend trading. I want to join the side that's getting squeezed. That's what you're asking, aren't you? Think about it. Very important. You just think about these things. Where is the question coming from? Is it hide? Like, oh, it can't go any higher. I want something to do. Or did you miss a lot of the upside and now you have FOMO because you didn't participate? So now you see, all this stuff goes through our heads. And I'm not singling you out. You're a great example of everybody, because we're all the same. We all think the same thing. I know for me, if the market runs away from me, the lunatic is going to come to the surface. Oh, you should have got that. Critical self with hindsight. I got to get in. FOMO. Well, gee, look, it's too high now. Maybe I can fade it and catch a counter rotation. Is that everybody out there? Everybody. Is that you? It's me. Why is it me? I'm wired to think like this. But the difference is, I've already paid the price or the tuition to learn about these pieces of my self, my psychological primal wiring, which is bring the food back to the cave. Don't starve for the winter. Be right. Get my ego fed. Give myself that proverbial, gee, you're smart pat on the back. Not here. Doesn't exist here. We have to separate our emotional triggers from what we do. And I think the primal way to do that is to have a plan with an edge, because there's no question to ask here. No questions to ask in this market when you're trading. The question does not exist. The outcome is random. You should not have questions. You can always say, well, what's this thing going to do? Of course, because it's random. But other than that question, what else is there to ask? Is there anything? I don't think so. Because I think the answers are in the plan. And if you don't have the answers in your plan, you don't have a trade, you see? Making a point here. So, this is the current retail price, or high volume. You'll notice as the market's going up, the high volume is the retail price. What is it doing? Language? This is a foreign language. I don't use indicators. Not saying you can't, me, I don't want them. They're the problem for me, not the solution. Less is more. We all look for certainty, and we want confirmation. What happens if there is no confirmation? That the best you have is maybe. What do you do? Huh? Well, maybe it'll do this, maybe it'll do that, maybe it won't do anything. I don't know. Let's watch. All right. Next, what do we know? We know this is too low. I'm going to put a little line on here so we don't forget. And now what do I know up here? Let's come back. I have my liquidity going to the moon. No clue. I don't know. But at 9:30 Central Time, we get something called the IB, or initial balance. It's one of the few time-based trades I take, but this statistic has been around forever. Now, intraday, I don't use the clock. In other words, it's not like in here, 5 minutes and then something happens or whatever. That has nothing to do with this. But the IB stat is the first hour's high or low. And back in market profilage days, one moment. The idea of this was high volume goes through in the first hour. Like whomever has to execute and get their thing done. And as you know, if you follow volume, it also kicks up the last hour. So most of the volume runs through first hour open, first hour, last hour pre-close. So if that's the case, it takes the theory, or the understanding was, and maybe still is, that it takes a higher time frame participant to push the market outside of the first hour's range, because you need a higher time frame participant, because now most of the business has already been done. So if there's more business to do, in theory, we come out the first hour's high or low. That tells you that there's maybe somebody in control. Now, we figured that out already before the RTH opened, but let's assume that's where this stat came from, just so you know. So, IB high. And what was that stat? I know you write it down. Taking out the first hour's high or low is 98%. Well, seems to me we're not doing that, right? So first hour's high or low is here. Yesterday's high, that's where the stops are. So for me, it's longs only. Now, how do I get long? Great question. So at 9:30 Central Time, which is here, the IB stat is open. So I now have this 98%, and I have this fuel. Why would I take a short? How about not me? You knock yourself out. Is that sustainable? Probably not, unless you have an edge. So let's look at the language. What do I know? I know this is my current retail price. I know this is too low. This is what I know. Let's look at what else I know. I know on VPOC migration, what are the possibilities? Up, down. Great. If it breaks, if I rotate here and I can come up and across, I can, do my thing. If it can't get above here, then the last place it was too low is here. Now we have a structured trade in the TraderLab called VWAP to VPOC. It's a structured trade. Now you have to vet these, okay? This is called VWAP to VPOC. Now, you're saying the VPOC is here. Well, yeah, but let's go with the but. But what do we know? The VPOC is here. What do we know here? High volume is here and the VPOC is there. We come under it. We break above it. Now resistance is there. That's too low. If this becomes the VPOC and I leave it, it's too low. If this becomes the VPOC and, it could do anything, it's too low. So what do I know if the VPOC comes here and this is too low? I can come back and check it. Now it comes down here. Now right here, the teeth will chatter. But what do we know? We're inside yesterday's range. I have over 98% probability to go here. I got resting liquidity there, and I got yesterday's high. Why would I take a short? Anybody? Well, you could. Me? Not so much. If I have range from out here to there, which one of these trades do you think is the better trade? Sell this to there, or see this and use it for trade management and then put the trade back on here, or whatever your plan tells you. So this is the next trade. Let me show you. Now this trade is also, I always say they're interesting because yeah, they are. Let's look at how you might trade this thing. I'm going to take you into micro. First of all, this is what I know. I know this might be too low. Now so just watch. Let me try to mark this thing here. Close enough, right? Horseshoes and hand grenades. So this is my too low and this is my too high. I look at these like support and resistance. By the way, if you have questions, post them. I have to try to get the YouTube chat back. It just will not stay on top of things. It disappears. How we doing in YouTube? Are you guys okay? I don't see questions, so you guys must be having a wonderful time. What do you got? Cocktails going out there? Isn't it a little early for that? So let's look at these trades. Now there's two possible trades here. Liquidity comes in the book. VPOC migration. And what's the behavior? Come under, too high, go low. Come over here, break high, support is here. These are longs. All this is long. You'd be risk neutral and you're going here. This is the trade, okay? This is a structured trade. Now, what would happen is you'd be risk neutral, and as far as you know, because you don't know and you can't know, you're going there because that's a trade. Now, what happens here? Where's the stops? They're going to be under here. So here's the choices for this astute group of traders. You get risk neutral and you get taken out right here. You scratch or here. So this is kind of a way to think about this is we know stops are going to be here. So I already know that. I already know my buyers are here and there's my buyer. You can see them. All right, that's nice. Here's my test of the micro high volume structure. So even here, I have the same thing going on in a short time frame. Let me show you what it looks like. So I'm operating what you guys call multiple time frames, but it's really not time-based. It's really more behavioral-based, volume-based, okay? Order flow-based. So time is not part of what I do in the intraday time frame as you think of it. I just read it. So this is where the buyers are. The buyers are there. I got some buyers sitting over here. There's the icebergs. Here's absorption. And I need a trigger. So this is my location. And either, what is it going to do? Do the Acapulco cliff dive, maybe fall out of range, or I'm going to find my buyers. That's what I know. All I know. I don't know anything else. Now, let's look right here in the microstructure. I'm going to take you down to what triggers look like. Just a little sidebar trigger.
Is the story changing any landmarks?
So, location, think real estate, order flow, no clue. Watch. Watch the microstructure. So right here, I've got location. I've got my buyers. I've got my VPOC, and I got VHVN up above. This is VHVN also because it came over here. So what the market is doing, and let's change this to a language, it's checking this price. It's going, and maybe this is, too high and we're going to keep going. But if it turns out that it's too low, what's the nature of the market? It's a shopping. It's shopping. So my possibility is to come back there. So that's my trade. Sticking to it, who knows? So now here's the trigger right here. This microstructure. Here's how this works. Micro sellers are here, buyers are here. Buyers are there. This is, all this is buyers. Who knows? Trigger. And why is it a trigger? Sellers are there. Break high. Now where are my buyers? There. And where's my high volume? In multiple time frames, it's right there. So that's my trigger. Break high, get long, helmet. Now, stop goes there, stop goes there. It's your trade plan, it's not mine. These are longs in TraderLab. So let's watch. Notice the buying. So my buyers are here. There's my break. So this is, if you're long here, which is the trade, if you vet it, you're risk neutral, and then you're going for this. So that's the trade. So, whatever it does, it does. Now, you're going to say, well, look, you would have got stopped out. Well, you would have got taken out, but if you're in the TraderLab, it's a minimum 2-lot configuration. The job of the first contract is to buy the stop on the second one. So if you only got long here, you'd be risk neutral. If you just went, for break even, you'd get stopped out and you'd scratch. Now, let's come back to the structure. I come down. What do I know is under here? Buyers. And what else? Sell stops. The risk adverse retail traders who use a micrometer because they don't want to take stops. Here's a question for you guys. Do you think it is in your interest to put your stop where all the other risk adverse retail traders put their stops? If now your nature, and I mean your nature, and this is the primal wiring aspect, is to avoid risk, seek certainty. Oh, I don't want to lose more. I'm going to put my stop one tick under here. You and 20,000 others. Well, I found after keeping metrics, and you would do this too, if you actually do the work, you would know that if you put your stop there, you might have a good chance of getting taken out. If you put your stop further away and you use some kind of structure, you're still going to take stops. But what are the probabilities of getting taken out under here versus over there? Even though you will. So you take a larger loss if it comes under here, but overall the samples that you take based on this trade management versus that, what is the net outcome? Which one gives you a better risk reward? Is it getting taken out there, going for that, or is it out here? And you still might get stopped out. So let's assume you do. All right? You do. It's under here. You get taken out at the low tick. Happens to all of us. Don't you get excited when that happens? I'm euphoric. But I just take the next trade. I go, what the, and then there's the stops. There's the buyers. Now, right here, I don't know there's a buyer. Do you? No, I see the seller. What happens here? Break high. Where am I now? I'm back above this. This is the same trade. This is the same trade. This inventory grab, same trade. Put the trade back on. Where am I trying to go? Well, there and maybe here. So let's see. Are these the same trades? See, And then there. That's a VPOC migration trade. I made it up, who knows. Now let's watch. And where's our, where are we trying to go? Well, IB, all right, 98% probability that we get over this. I don't know about you. I'm taking those. What's this? This is an order flow trigger. May not be your trade, nothing to do. This is a structured trade. It's a more advanced process. And the entry here is more complex. Let me show you. And this might not be your thing. Just going to show you the trade. I want you to see structure. There. So let's talk about what you're seeing here. These are buyers. All right. And look at this. They come in the book. Now, unless you're catatonic, we already know, and let me put this out here too. Let me show you something that looks the same from two different angles, okay? Just follow with. Be patient. So, what do I know? Break high, going to the moon. Don't forget now, this is, wait a minute, 930 is what I'm interested in here. Hold on. So I have a 98% probability of getting over here at some point. That's why it's longs, trying to go, 98 and then up the financial food chain. Here, I have liquidity and a variable high volume node. I break above the liquidity and there's no way to know. I also have, let me show you this again, this, because I got my sellers here. So I anticipate sellers. Why? They did a pretty good job on that downswing, don't you think? So if I understand that, then if I come back here, I need to anticipate that these sellers might show up again, which would be here. Okay, so if I'm getting long against here, if I have a trigger, which may or may not exist for me, let me look. This one is tough, okay, because look at the range before you can actually get in. It's a little rough. This one, if you took this, your risk would be under here. Just saying, if that was your thing. All right, and you're still working towards, right? This is resistance. You have a 98% probability of here, and then you've got value area high. All these are structured trades. Let's just watch. And then yesterday's high, and after that, you could be back in your Barca lounger. Do you still think you need to be doing something now? Those of you who think you're an hourly worker, you are not. You are here to trade edge. If you don't have one, you do not have a trade. What is this? This is a long, let me show you, it's advanced. This is where the sellers were, okay? You see them? And here, the sellers are, and that's why I draw this. Now I come up here, I get a sweep. So that suggests the possibility of a counter rotation. But what is the issue with this, you're asking? 98% probability, you see? So if that's to end this, so I got targets in, value area high and yesterday's high, so all that. So everything for me is get long, forget the shorts. Shorts are trade management. Sweep, support, break high, entry, continuation long, going for that. These are structured trades. Again, some of these are advanced. You have to learn them. You need to understand why this might be a long. You also understand why this would be a scale. Break, sweep, area of interest, break high, buyers in control, test, entry, where to? There, 98%, and then up somewhere. Let's see. So anyway, for me, no shorts. I haven't had a short today. And I can't imagine anybody trading a short today. And that I'm only saying that relative to the time frame I trade, not anybody who's very short-term oriented. Because where's the edge? I always say to developing traders, align with the dominant side. Don't trade counter trend if the market, because why would we not trade counter trend today? I thought, well, who's trapped? Think of this like armies. There's an advancing and a retreating army. The shorts are retreating, the longs are advancing. However, the market rotates. Think of those rotations, counter rotations, like a counter attack. If the shorts are retreating, so the buyers are advancing, and we get a counter rotation, what does that do? Well, these guys, the shorts, who are getting squeezed, can use the counter rotations to become buyers. So the market counter rotates on retail trader, weak trader, fearful traders, which we are all fearful. They're micromanaging their trades, which is fine if they have an edge. Most don't. So when we get the inevitable counter rotations to take these stops out, if you're sitting short in a different time frame, what are you going to do with a counter rotation? Have you ever been short when the market's going up? Have you ever tried prayer? I mean, I'm just telling you. At some point, just think about when you were a kid in school, you know. Please get me a good grade on the test. I promise I'll never do it again. I'll do my homework or whatever it is. Get me out of this. When you start praying or whatever it is you do, and you make those commitments, I'll never do it again. Just get me out of here. That's just noise, and that's mental stuff. What we understand is retail traders all do the same thing. Remember, think like a retail trader, don't act like one. This is support, isn't it? What happens if I break under it? Doesn't this become resistance? Doesn't this become support? If I get under here, this is the retail price, and I can come, wherever. Let's see what it does. Breaks low. Now, I believe this is when we were going to have the President POTUS speak. Is that correct? And let's look where we come. Support is here. And this is called VWAP to VPOC. This is a structured trade, and this is how this trade works. Now, you see this kind of stuff, right? And I'm sure it disturbs you. It disturbs me. Why? Because I know I'm in an area, but I don't have precision. It bugs me. Because now I'm fearful. I'm uncertain. If I'm uncertain, what am I? Fearful. Is everybody with me? I am uncertain, and I'm looking to avoid risk, and I'm looking for certainty. Here's what's certain. Do you guys know what's certain? What is certain?
Yes, short delta alert. Yes, short delta alert.
Stephen, I think the Blue Jacket is over. That was for the month of February, so they might have missed out on that already. If you didn't take advantage of the Blue Jacket and for the month of February and 3 months free Global Plus and data, I think the door, as they say, is closed. Death and taxes? Oh, okay. So this is where the buyers are. No, what are we certain of? We are certain of uncertainty. The only thing we know is maybe they'll do this, maybe they'll do that, maybe it won't do anything, I don't know. So I know this is my location. I got liquidity. I've got an outside edge. My VWAP, this is a structured trade. So here I'm looking for longs. I get the sweep here. This is a long. I'm trying to get risk neutral. Either I would or I wouldn't. That's as deep as this is. If I get risk neutral, my stop could go under here, and I'd get whatever happens. If I get taken out right here, liquidity comes back in. This is my over under. I see this. I have the liquidity. I'm looking still for longs. If I get long up here because I'm looking for certainty and I take a stop, I just take the stop. So I'm looking for another trigger. Here, I could be looking to get in. Here, right here. This is a long. My stop has to go below here though, because I got buyers here. So I use this. If I get long here, I'm going to be under here. If I whatever happens, happens, right? This is business, guys. Whatever happens, happens. Do you know what's going to happen? I don't know what's going to happen. So don't know. Do you? I don't know. What is this called? Mean reversion. Underline the term mean. It's called VWAP to VPOC. It's a structured trade. If I come back to balance or the fair price, remember how this works. Shopping. Oh, it's on sale. Retail price. Well, what's too high? Well, I do have a 98% probability. And I have this, the fair price from yesterday. This should be over here. And what else? Yesterday's high. That's my targets. I don't need anything else, do you? And that's as far as I got. Because of statistical probabilities. Now, this is open also, which doesn't mean we're going to go there. It doesn't matter. You could be done. And this is TraderLab. Now, here's the thing. Do you feel, I'm using the term very intently, that you should be taking shorts now? That it can't go any higher? What do you feel? What do you feel? Tell you what I feel. I feel I'm thankful I have a plan with an edge, and I'm thankful that I've learned to manage my emotional state after many years of intentional practice. Using the error cost calculator many years ago, probably in the late 1990s, which is when I kind of came up with something because I was curious. I said, I'm making these errors, and I'd write them in my journal. Yeah, did this, bailed out early, moved my site, right? Anybody? Does that sound like any of us? Is that you? So I created this thing, and I started, instead of just writing them in a journal, should have held, should have, whatever, it was, well, if my plan is not specifically defined about what I should do, that's one part, then I don't know what to do. I'm making it up. Okay, that's gambling. That doesn't work. What about not knowing what to do? Well, what should I do? Well, I'm going to get out. Well, what is that? My plan said you have a target up here statistically. Maybe you should stay in. Why didn't you? I don't know. I was worried about giving it back. Error, 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 error. And what is that error? Imagine over a month throwing $10,000 out the window, or putting in a pile on in the floor, but putting in the garbage can and lighting it on fire. What I found for myself was if I eliminates a nice thing, but let's just say reduce my errors. Those dollars were already in my account. I was throwing them away. That's the error cost calculator. In fact, one of our traders in TraderLab, who does a lot of coding and that and data mining, and many do, by the way, Greeny created something called an error cost calculator. When I found it was 10,000, even more. I don't want to go into numbers, but substantially larger over certain months. I worked to reduce those and to work on my plan and I quantified what my emotional states were doing, and they were the biggest problem. I believe anyone who comes to TraderLab can learn how to trade. Trading is not as complicated as you think. It's really not complicated, but here's what it is. It's random. So if you look at this at gaming, and not about predicting and being right, casinos just play games that have edge. They only control up to when they deal the cards. We are in the same situation. We only control the games or the trades that we take, and if they have an edge and we have the discipline, then the dollars are going to, in a random distribution of outcomes, are going to come across the table to us if we sit on the house side of the table. This is the business of trading. It is gaming. If you're interested in understanding the business and potentially building a sustainable career path, you might get some of that or all of it in the TraderLab. And always, past performance is never indicative of future results. You actually have to roll your sleeves up, do the work. And the other thing is undo. the things that are keeping you from sustainability. So you've got to maybe change your beliefs. You might believe what you're doing is good, but what you might be doing is just getting random distribution of outcomes that have no edge. You'll always have winners. Throw a dart at a board, you'll have a winner. Use a random buy or sell generator, you'll have winners. But what does that tell you about randomness? And what might that tell you about potential sustainability? If you're interested in those answers, come to TraderLab. There is no cost. Use the link in the bottom of YouTube and visit the TraderLab community. It doesn't matter how long you've been trading, what you do, how you do it. What does matter is you're interested in creating a career. And we'd be glad to help you and welcome you to the TraderLab community. Thanks again, everybody. Please give a like on the way out. Hope you got something from this. This is the TraderLab. It is available to all of you. Don't forget to like. Appreciate you guys visiting. And there is a library of webinars and 60 PDFs of structured trades you can download in the Bookmap Discord TraderLab community of some of these structured trades that you can reverse engineer. There's a lot of information. Unfortunately, I don't have a lot of time here in the stream, but everything in the community is available to all of you. And again, at no cost.